Okay, are we live? Yep, we're live. We're live. Welcome back, investors. Today, in episode 41, I'm going to talk about growth stocks. I'm going to talk about the top performers within my portfolio. I'm going to talk about one dividend payment that I've received, and I'm also going to talk about a Warren Buffett quote, which I believe is incredibly poignant at a time like this. It's going to lead me to talk on about growth, debt, and also the recession. So if you want to know more, like, comment, subscribe. Let's help the channel get to 4,000 subscribers, and we can get the world of investing out to more people in a clear, simple, and transparent manner. And if you are a part of those more people that haven't yet made the plunge to start investing, I'm using the free trade application, and if you want to use it too, my link is in the description to sign. Click on the link, freetrade.io/infant-investors, and you will be able to get a free share worth up to £200 by signing up, depositing £1, and starting to invest. So hit that link in the pinned comment below. But first, let's get into the top performers as usual. This is how we're going to start our portfolio updates in 2020. And the first one to talk about is Okta. So Okta for me at the moment has gone up, and I'm getting all of my stats obviously from Simply Wall Street, as I mentioned, because it gives it to me, but it's the same, you can see here anyway. 8.65%. One of the reasons why Okta seems to start having a nice trend is there's a lot more analysts that are a bit more bullish on the stock when they're looking at the fundamentals of Okta. Okta is a business that hasn't turned a profit, but they do believe it's going to make a lot less of a loss this year, and they actually do believe that Okta's path to profitability by the fourth quarter of this year might actually realize. So I think because of that sentiment, Okta has grown by 8.65% this year, which even in the midst of the S&P 500 slightly having a little bit of a dip, Okta sort of outperformed it this week. So obviously still early days, but obviously it was one of the growth stocks that I picked because I do believe it's going to have a good 2020. I don't think it's going to have as good a 2020 as it did for 2019, but I strongly believe that the debt will start to, the losses will start to decrease. Their enterprise model, and they're going to really sort of be the biggest players in the sort of identity management space and so forth. And their client base, like I said to you, for me is just ever growing, Oscar list of great enterprises. So yeah, I do believe in this stock going forward, and it's good to see that it was the best performing stock for this week. The second best performing stock for this week for me was Uber, and that grew by 8.29%. You know what? The free trade percentages and the Simply Wall Street percentages are matching. Usually it doesn't match. That's all good. It grew by 8.29% this week. And I think one of the main things about Uber, which is the reason why it grew this week, is they announced their Uber Hyundai Air Taxi. So if you don't know, Uber is partnering with Hyundai, and they're going to partner with a whole bunch of other manufacturers as well to create this electric air taxi, which is basically going to be able to fly you from one destination to another destination, just like you would in a normal cab, but instead obviously via air. Meant to be safer than helicopters, more greener than helicopters, can travel more passengers than helicopters as well. And that's what they're announcing to try and do by 2023. So they're really trying to get into the sort of air travel space on a more, democratized level. And I think that's obviously a fantastic move. They're talking about, journeys that could be like £100 to go from potentially like LA to somewhere else, etc. That's within a certain amount of distance, maybe Texas or something along those lines. I can't remember where they actually said in their release, but Google it and you'll find out. So I think there's a lot of people that are bullish on Uber because of that, and not to mention their other product lines still seem to be growing. Obviously they're not a profitable company, but we do know from history that profitable companies don't necessarily mean that they're going to be the ones that outperform the market, so to speak, and similarly ones that are not profitable doesn't seem that they always underperform. It all depends on a variety of factors, especially with these growth stocks. So yeah, Uber's done well this week, and that is the second sort of best performing stock. The third one is Shopify. Shopify has gone up, if I can actually find the damn one. There you are. Shopify for me has gone up 6.41% this week. Another match, perfect. And they have announced their merchant fulfillment warehouse. Basically, it's going to be like a centralized warehouse that they're going to do all of the fulfilling for their merchant providers. A merchant provider would be someone like me. If, for example, I created a Shopify website and I was selling infant investors merchandise through it to the US audience, then I would potentially be a merchant provider, and then they would have all of the warehousing needs for me, all of the invoicing servicing, basically that whole supply chain management they would basically do for me, which for small business owners and for people trying to break their way, trying to link up all of those different services can be quite difficult and sometimes quite costly. So this could be a really big opportunity. It will cost Shopify a lot, probably in the region of about 200 million, and I think they said about 800 million is the amount they will need to potentially break even. But again, they're another one that in maybe a year or two, that this business unit, not Shopify as a whole, but this specific business unit could become profitable. Anyway, people have really likened this approach. They really believe that Shopify is a competitor to Amazon. I never really got Shopify as a competitor to Amazon when I personally purchased it. It wasn't that I thought, Shopify is going to take on Amazon. I got Shopify just because of what I believe its own business merits are, and the amount of people that I've seen in my personal endeavors, in my understanding of the tech world, and people using it as a platform to potentially start and launch their own businesses, which is going to be an ever-growing thing. I mentioned that I was working in a bank during the last recession, and one thing I saw when the last recession occurred is that so many people took their redundancy money and actually then started their own businesses. Like hundreds and thousands of people, and I know that obviously must have been a trend across the United Kingdom and across the world, to be fair. And if people are predicting that in 2020 or 2021 a recession is coming, then platforms like Shopify will be the go-to place for people to start online businesses, to sell products, etc. So me personally, I just think that its platform is a very strong, powerful platform, great integrations with other apps and providers, and it's just really simple. And I think things that just are simple and they just work are always going to do well in the long run. So I think Shopify is still one of my greatest new growth acquisitions, doing 29% for me at the moment, and I do consider that will still continue to grow hopefully in the future. The fourth one, I should normally do the top three, but I like to talk about the fourth because the fourth one is always controversial. And the fourth one this week is actually PayPal, which has grown 3.5% for me this week. Now, the interesting one about PayPal is that I think the growth of Honey, so I talked about the reason why I purchased PayPal is because they went on a massive rampage of acquisitions over the past few years. We talked about Braintree, we talked about Venmo, we talked about so many other acquisitions that they've done, or new creations. One of the acquisitions which we didn't speak about was a business called Honey. Honey is basically it's kind of like a plugin. So it's a plugin, it's like an extension for your browser, and what it does, it finds deals and coupons and discounts for you on all different sort of e-commerce websites, etc. So Amazon potentially being one of them, and then let's say it finds a 10% discount or something that you might need, it lets you know, and then obviously you can go on that website, purchase it. So it kind of finds those deals for you without you having to really do the legwork, and they purchased it for about £4 billion. Now the issue is Honey is growing significantly at the moment, but also there was a bit of controversy this week because Amazon put out a banner on their website saying that Honey is malware and it's actually dangerous, and actually people didn't really take kindly to that. They actually felt that Amazon was typically just trying to sabotage Honey and PayPal, just because PayPal used to be linked with eBay and Amazon have never done any work with PayPal. For example, you can't use PayPal as a payment method on the Amazon website. You have to use credit, debit card, etc., or other payment methods. And so people just saw it as they see PayPal and Honey as a threat more than anything. And I think that's then had a positive impact on PayPal's stock price because they believe in Honey and they actually believe that this is good for consumers. So I think that's a very, very interesting thing where we talk about there are always opportunities and threats facing different businesses and competition and so forth, that people can actually, use, their insight into saying, actually, this is not right. I don't believe in why you've done that. And actually, that must mean you're threatened and you're scared. And so therefore, maybe PayPal is actually a better investment. So I believe that's probably the reason why PayPal has been in my top 4 stocks, because it's never been in my top 4 stocks since I actually purchased it. But not only that, I personally think PayPal's balance sheet, PayPal's their liquidity, they're just a very, very safe growth stock for me. And so I just believe they're similar to Facebook in that instance, but I just think that in the payment and fintech space, there's a lot of opportunity for them to grow, and a lot of their new business units is going to grow. So I'm really happy with that. So those are my top 4 performing stocks. Imperial Brands was in the top 6 as well, and also within the top 6, one that I didn't mention as well that was in my top 6 was Vodafone, which also had had, a bit of a rise this week as well. So yeah, but those are my sort of top performing stocks. And for me, the message here is that growth stocks once again are my top 4 performing stocks. We saw that last week. We see it this week. We saw it towards the end of last year. These growth stocks that I've only acquired within the last 6 weeks now are seeming to always be in the top performing stocks, that and Imperial Brands. And so, it's something I want to talk about later on, about not being too complacent, because, there is always a nervousness I have with seeing, sometimes a consistent pattern and behavior in a certain direction, which I'll talk about. Anyway, let's go on to the one dividend payment, which is Imperial Brands. Imperial Brands paying me a dividend this week of £65, which I'm pretty delighted with. Imperial Brands this week also, just another sort of minor portfolio update. It tinkered into the green this week about 3 times. It sort of edged in 0.2, then it thought, oh, I'm scared, I went back. Edged back in about 0.6, oh, I'm scared, it went back into the red. Then it edged back in, I think 1.1, and then it went back again. So now it's sitting at minus 0.4, but you can see I'm only £9 in the red with Imperial Brands. You guys know Imperial Brands has been a stock that's been 20-30% in the red for me on multiple occasions. Obviously, I averaged it down, but not only that, the stock is starting to perform well, and I mentioned that it's to do with the whole FDA regulations. FDA, yeah, the US food standards, or the food, or the FDA, let's call it the FDA, the regulations that they had about vaping, which they're just sort of softening it. I mentioned it in a portfolio update either 1 or 2 ago, so that's the reason why that started to grow. But someone asked me the question, when is going to be my Imperial Brand sell spot? Because I do kind of want to sell this stock, to be fair, but I'm gonna kind of ride the wave a little bit. I think I deserve to see it being at least 10, 15, 20%, and then I'll make a decision over at that time. I know when I first started purchasing, I was buying it at £26 and so forth, so maybe it'll get back to them lengths. I don't know. If we do go into a recession, I believe this stock, is a stock that will continue to thrive. So, I will play it by ear. I haven't made my decision one way or the other as of yet. But anyway, the last bit of this portfolio update I want to talk to you, I say last bit, it's the longest bit, to be fair, is this Warren Buffett quote. So I'm sure some of you guys have heard this Warren Buffett quote, which basically says, it is wise to be fearful when others are greedy, and greedy when others are fearful. I will repeat, it is wise to be fearful when others are greedy, and greedy when others are fearful. And I think, for me personally, this rings absolutely true at this current time. We are seeing, or I personally believe we are seeing, let's put the month graph up so you can see on my portfolio, it's a bit clearer. We are seeing an exceptional level of bullishness in the market at this current moment. Every time I open the free trade app, I have an expectation that my numbers go up, and it seems to always happen. That for me is nerve-wracking. I don't like things to be that sweet. Every single time I'm opening the app, my money is increasing. Now, on the one hand, you could say, oh, well, maybe you're making good stock choices. Yeah, okay. But I think also there is also other factors that are at play. And for me, basically, there's 3 ways that I'm personally looking at this. I'm not saying this is 3 ways the market is looking at this or analysts are looking at this. This is just 3 ways that I'm personally looking at this. And obviously you guys might look at this different, which would be fantastic to hear in the comments as well. I think either the market is going up because the true value is starting to resurface, and there'll be more growth this year, so there's nothing for me to really be nervous about that. And what I basically mean is that I believe in 2019, barring some great growth stock performers, we had a really bad year just because of all of the macroeconomic factors that ensued, which we've talked about all of the time. Now, if those factors are now sort of starting to dissipate, so to speak, and now true value is coming into the fore and resurfacing, then maybe this makes sense, and maybe this is just all that's just happening. Another, I guess, theory of mine is potentially that we are fully valued. I mentioned last week that a lot of analysts are saying that we are fully valued with some stocks and in some parts of the market. And so really and truly, what's driving growth in a lot of stocks at the moment is just pure sentiment. And, we see that with things like, obviously one of the most obvious examples is Tesla, but there are actually loads of examples that's not just Tesla. This is basically a straight line with a slight sort of crevice and dip there. And so what they were saying is that true value is fully valued and the market sentiment is really, really driving it. Now, The other thing that potentially could be for me is that potentially a bubble is ensuing. So if you see the video that I made, which I'll leave the link in the description, which is about, stocks are at an all-time high, should you sell, should you hold, should you buy, we talk about, the theory of market bubbles, etc. within that. And that for me is obviously, the same pattern of behavior from the prior financial crisis, where, things are just at all-time high. Everybody thinks that everything is great and it's going to always continue to be great. And then obviously, a crash tends to happen. Now, the outcome could be, say, a correction of, say, 10-15%, and actually things could still be growing. So there's actually nothing to potentially worry about. But some analysts are now predicting, particularly in the US, that there will be a recession, and their prediction is that there's going to be an 80% recession. I don't really like percentage predictions, because percentage predictions is kind of just like, yeah, you could win either way, basically. Like 20% we were right, 80% we were wrong, 80% right, 20% wrong. Like, it's kind of meaningless. If you say 50-60, 50-50 or whatever, then it's kind of meaningless. But I think what they're trying to illustrate is that there is a higher probability this year of a recession that they personally believe, through a number of factors. And so my message is really, and my message is more to myself, to be fair, but some of you guys might resonate with this message, is to not get complacent and not to get over cocky and think that, it's just pure brilliance and intelligence that's creating all of the growth in our portfolio. Yes, obviously, you made a decision to buy or sell a specific stock, probably buy in this instance when stocks are going up. But I would say that in some instances, particularly with some of my growth stocks, particularly with Tesla, particularly with Apple, Adobe, some of these, really powerful stocks, it could also be a little bit of greed within the market, of people thinking that, things are always going to grow up. There's so many forces that actually push, stock prices within the market, from the macroeconomic landscape to market manipulation. Just look at the film The Big Short, where, mortgages were defaulting, but bonds that were insuring these mortgages were still increasing. So imagine that. People were actually not paying their mortgages, they were defaulting on them and losing their properties, but yet the bonds insuring them were still going up for a time being, until it eventually started to collapse. So there is always that element of greed within the market. There's always that element of manipulation. I think there's a lot of examples, like the Tesla example, where people have bought Tesla for the right reasons, because it's a brilliant company ran by a brilliant CEO, and people are continuing to buy into Tesla because they think it's just going to continue to go to the moon. Nothing always goes to the moon. I've been in situations where I've been stung previously in the past, thinking that things are going to go to the moon, and it doesn't. And so my message to myself, and obviously to anyone out there that values it as well, is just to not be complacent, not be too cocky, and also just to manage your risks. And it's not to put a downer on your gains, but it is to manage your risk and to make sure that you do all of the practices that you are meant to do. So you don't go and put in all of your cash reserves in there. You have your emergency fund in case things start to go wrong. You have your cash portion of your portfolio. You have things in bonds or whatever, things that is more defensive, just in case things go wrong as well. And just to sort of be wise of that, because one thing that I truly believe is that it's common for people to think that they've done nothing wrong when stocks go down. They think that I've selected the stock because of all of these reasons, and it goes down, and they think, what, it wasn't really my fault, it was this issue that happened, and how could I have predicted that, and that's the reason why. But then it's uncommon for people to think they've done something right when stocks go up. They always think that it was their own brilliance, and I think I'm guilty of that as well, to think that what, Shopify is doing fantastic because of and I foresaw this. Sometimes you can't foresee some of these things. Some of these things are luck that do play a factor. You do have to make as much rational analysis as you possibly can, but there is always going to be that element of markets, institutions, market manipulation, and unforeseen things that happen that actually grow your stocks as well. So what my message is just to basically be a little bit cautious as well, and not to go too heavy. Last week I spoke about me dumping a whole lot of more money into a lot of these growth stocks, because it doesn't seem that they're going down. But then for me now, when I reflect on even my own decisions, which I haven't actually executed those decisions, but when I started to reflect on, actually, is that the right thing to do? Are you getting a bit excited? I had to challenge myself and be like, what, I think you're getting a bit too excited, and actually, stick with your original strategy. If you find another opportunity, put the money into another opportunity, maybe put them into dividend stocks and get those passive income if things do, start to go downwards, etc. But maybe stick with if you see a drop by, rather than adding something that's gone up by 20% over the last 5-6 weeks. So yeah, that's what I'm basically illustrating, because one thing to mention is that the latest International Monetary Fund, IMF, suggests that global debt in the US and emerging markets now is at unsustainable levels. And they're basically saying, a lot of their analysts from the IMF is basically saying that we are in a very, very similar time that basically preceded the last recession. I did a survey, like I said, on my Instagram, which about 200 of you filled out, which is awesome, and 48% of you think that there's going to be a recession this year. And if you look at the IMF figure saying that we're at basically the same debt levels in terms of a percentage that we were prior to the last recession, and it's unsustainable. We're obviously at low or stroke negative interest rates, which was there to stimulate growth, but we're seeing a lot of growth in the market. So if we're seeing a lot of growth, then actually should we not actually be at higher interest rates? And we don't probably feel that the Fed or the Bank of England is going to put high interest rates at the moment, because they're probably going to want to keep stimulating this growth in the economy. And actually, are we now at dangerous levels? And so, if people continue to borrow just because interest rates are so low, there could be that converging turning point where actually things start to go south. So yeah, I think for me, I wanted to get off my chest that there's an element of caution. Everything is rosy daisy. It does look pretty right now, but it might not stay rosy daisy for long. Just always remember that the economy is a cyclical engine and cyclical machine, so everything goes round in circles. It's kind of like Nike trainers. When Nike trainers just keep coming out every sort of 10 years, like 10 years ago Air Force Ones was the lick, and then it disappears, and then it comes back, and the Air Force Ones are the lick again, and TNs come back, and Huaraches come back, and Nike trainers just literally regurgitate their same trainers every sort of 10 years or whatever. The stock market is the exact same thing. The economy, rather, the broader economy is the exact same thing. The patterns seem to come back on a cyclical basis. So it's just for any new investors out there, or for people that are new to this whole financial world. You might have picked Tesla a month ago. You might be seeing, 60% Tesla growth. Don't think it's always going to be like that, and always have your other risk management and other strategies in place just in case things, go downwards. It might carry on for the next month, 6 months, for the next year. But I think it's not unwise to have a bit more of a safer, steadier approach as well. So yeah, that's my portfolio update for this week. I'm hoping next week as well that I want to see some of my other stocks actually become good performers next week, especially some of the UK stocks. So it'll be interesting to see what happens there as well. Because if it is continuing to always be the same growth stocks, then yeah, it's gonna make an interesting decision that I'm gonna have to make in terms of what my next round of investing is going to be, and where I basically allocate some of those funds. But yeah, hopefully you found this useful. If you did, like, comment, subscribe, get a free share with the link in the description, and the pinned comment, and obviously get in the comments with your thoughts and feelings on everything I've discussed, from growth stocks, economy, bubbles, debt, recessions, dividends, whatever you want to talk about. Get in the comments, and I will catch you next time with another investment video. Take care, guys. Peace.